Hey, what's good, YouTube? This is Chris Hendricks. So today we'll be breaking down NAS100 NASDAQ right before the new week. So today's date is the 1st of October. So in a new week soon we'll have NFP and stuff. Let's jump straight into the charts. So I'll be looking at the past setup that I had and show you guys, and then we'll pick it up from that point, right? I'll just quickly explain what's been happening so you guys can be up to date. So this is currently the setup that we have with NASDAQ, current market right here. So that's what we're looking at. So as you guys can see, let me just scale down to the hourly time frame so everything can be clear. So you can see we're already at the support and slightly moving away from the support, going upwards, meaning that we might be going bullish. So in the past video, I explained where the possible breakout could be, whether it was a sell or a buy. And let me just share my other screen to show you guys what I have there, right? So we're in the second screen. So you can see that this is where the price was at, right where this arrow is. And we're still around the support, and I was anticipating the price to go up, breaking out of this structure or this correction that we have, reversal correction, going up, and followed by a correction, a small correction. So an impulse moving away from the structure and the support. And then we wanted the price to give us this nice structure right here that we have, which is a correction, continuation correction to the upside. So that's what we wanted to see right before I execute. And yeah, I think we got just what we wanted. So let me go back to the first screen. So you can see the price moved up, breaking this resistance right here. As you can see, that is a clear breakout, moving away from the support, followed by this nice correction. So one thing about our structures or corrections, we need to see at least 3 touches, and then the third touch being the highest probability, right? So we want to execute at the third touch. So let's quickly count the number of touches that we have with this small correction that we have. So you can see we have 3 touches, and third touch is what we're going to focus on. So third touch, highest probability. So if I zoom in and scale down to the hourly time, 15-minute time frame, you can see that the price is kind of like moving away with huge bullish candlesticks. This one being the prime example. You can see that at the bottom it has no wick, showing us momentum to the upside. And the following one is also big, which has no wick at the bottom, also indicating that it has momentum, right? So you can see the next candlesticks were 90% bullish, with the exception of this bearish candlestick, but you know, the price will always correct itself. But the overall movement is basically going up. So if you guys are lost, let me just explain this simple method. So the price, whether it's moving away from your support or resistance, it will give you an impulse, right? and what happens after an impulse, because the price cannot always go in an impulse. It can't just go straight up. It has to correct in between. So which means it's going to give an impulse and then it will take a break to correct. After the break, whether the correction is a continuation or reversal, it's in the case of a continuation, the price is going to continue going up. So this is what we're basically looking at. This whole thing right here is basically this correction. And with that kind of correction, it means we must look for buys nonetheless. So a very clean setup, nothing hectic. And the reason why we're not 100% certain, but the probabilities are there. Reason is this correction to our support, right? So remember, we have two types of corrections. We have the first one that I just illustrated, a correction for continuation, followed by, in a case of a sell, in a case of a buy, we have a reversal correction for when the price reaches your level, it's gonna reverse, hence the name reversal correction. So that's basically what we had on the way to the support, giving us a nice double bottom. As you can see, the first bottom right there from the previous setup or previous video, followed by this nice second leg of the double bottom, right? So you can see this is a reversal correction, which was supported by the price breaking out of it. Right there, it broke out, which means the price reversed, and now it's going the opposite direction from a selling perspective to a buying perspective, right? So that's just a quick update of where the price is, like just an explanation of how we got here, basically. So with this correction, you can also draw your resistance, but it doesn't really matter. The only important part is the support, since we are buying, so we're looking to buy from the support. And in a case of a sell, you will look to sell from the resistance. So for now, we're going to focus on the support. And what's important is these number of touches, 1, 2, 3. So the third touch is the one that we focus on, giving us the highest probability, because say you entered at the second touch, say you took this small correction right here, this area. So say you try to buy from this point, and yeah, you could have made profit, but the price dipped again back to your entry. Sometimes if you have a stop loss tight, it would have taken you out. So that's why we always wait for the third touch and try to execute from the third touch, because from that point the price never really goes back to your entry point at the third touch if it's a very clean setup with no implications, right? So when it comes to taking your entry at the third touch, what you would like to see first is the price rejecting from your support in this case. And what I mean by that is, you can see as the price got closer to our support, the last bearish candlestick was way smaller than the previous one, which means a change in direction. It's losing momentum to the downside, and you look at from that reversal. Sorry, from that last bearish candlestick, you look at the next one. In this case, you still haven't entered yet. You're just looking for more confirmations that you are buying in a case of a safe entry, right? So once this last bearish candlestick formed, the following one was a bullish one, which is very interesting because in the formation of this candlestick, you can see it went down, went up. It was very indecisive, but at the end, it closed as a bullish candlestick. And what kind of bullish candlestick? It was more of like a reversal candlestick because it's very small. It has both wicks on both sides, showing a sense of a reversal, meaning you can only consider it a reversal if it's at a level where it will reverse, because you can't say this one is also a reversal where the price has already moved away from this point where it was key to see reversals, right? So right here, we just consider this as a regular bullish candlestick. There's nothing more to it. So once you've let this one close, you wait for the following one, because you need to see at least 2 bullish candlesticks in a row for you to have enough confirmation that yes, now I can enter, right? So our second bullish candlestick was very key in terms of it giving us confirmation, because you can see it has no wick at the bottom. And the reason why you might see wicks on your chart is because I am using this type of chart right here, hiking Ashi type of graph or chart. So I don't really want to get into the reason why, but it's just way much better in terms of checking out wicks, because I'm pretty sure when you're using the regular kind of chart, these probably have wicks as well. So this one just minimizes the number of wicks and shows you where wicks are more like important. So as you can see, this one is very important, this one is very important, but here it shows you the momentum in plain sight, right? So this bullish candlestick is huge with no wick. That tells you that there is ton of momentum to the upside, and it happened right after the previous bullish candlestick, which was more or less like a reversal. So now you are more certain that the price is going up. So what you need to do is you take your entry at the opening of the next candlestick. Like for us, the next candlestick was a bullish one as well, and you put your stop loss right below the lowest point, which is this wick right here. You just put it right below it, and you just scale up from that point, right? Scale up, zoom out, you just scale up to the next high, previous high, which is this area right here. Let me just take it, expand it sideways. So scale up to the previous high, which is at this point, and that's your take profit. So basically this is the setup. Let me delete these illustrations. So basically with NASDAQ, we are just hoping for it to go long, since we had enough confluence for the price going long. So confluence just means reasons for your perspective, basically. So you can argue that we don't have a lot of confluence for the price going down, but instead we have a lot of confluence for the price going up. We have way too many reasons for the price going up First reason is we have this nice double bottom right here marked by these blue circles. And at the second leg, we had a reversal correction. That's the second confluence. Third confluence is we had an impulse breaking out of this correction. Fourth confluence is that we had a continuation correction formed, indicating that the price is going up. Fifth confluence is that on our correction, we have three touches. The third one giving us the highest probability. So we execute at the third touch. That is 5 reasons why I am looking forward for a buy with this setup with NASDAQ. As you can see, this previous setup here also had 3 touches, third touch being the highest probability, as well as this one marked by these drawings. First, second, third, marked by the arrow. Third touch, highest probability. So that is very key in terms of your entries. So for the next maybe a day, this could play out in a day, as you know how NASDAQ is so volatile. Let me just get my measuring tool and measure how long it took for this price to get to this point. So that's basically a day, 6 hours, 30 minutes, 57 bars. So we could be looking at the same thing, but it could happen within a day instead of a day and a few hours. So as long as you set your take profits, you are fine. So this is basically it with NASDAQ. Let me just refer back to the other screen. Which one is it? This one. So you can see it's what we're looking for. We're expecting the market to form this nice correction that I just shown you guys on the other screen. We're waiting for this correction for us to execute it. Without this correction, I was not going to take this trade, even though other traders could have executed at this third touch of the correction, marked with this blue circle. But for me, that is more or less of a risk entry because anything could happen. You don't have enough reasons for the price going up. So I waited for the price to give me 5 reasons for me to basically feel comfortable to buy and go long. So this is from the previous video. As you can see right now, local time, it's 10 o'clock. Well, it's probably like 11. This doesn't seem like it's on time, and I don't know why. It's behind by like an hour. Oh well. So this is the reference to what we have going on currently. This was recorded on the 27th of September. So it's just basically a few days ago. I think that was around Thursday, if not Wednesday. Today is Sunday, few hours away from the market opening, and right when the market opens and it takes out, when it's done with that whole thing of it having large spreads and everything, we're just gonna take our quick buy because I haven't bought it yet. I didn't want to enter right before the market closed on Friday, so I'm waiting for the market to open Monday morning after basically all the spreads and the whole thing, you know, when prices open and then close. So I'm gonna take my quick buy. Even if the price moves, let me go back to my first screen. So even if the market just, because I know we're probably gonna have a spread. Okay, that is way too much. Maybe you see where the market is currently. It's right. Let me zoom in. So the price is currently right here, marked by this red drawing. The spread could reach around these areas depending on your broker, but usually local brokers, they have insane spreads during market openings and when the market closes. So which means if you buy right when the market opens, your entry is gonna be here, this level right here, but the price itself is gonna be here. So this whole gap will be your losses basically, because the price has to buy and then get to your entry point. So there is the reason why I'll be waiting for the price to finish doing its thing with the spreads, but I am looking forward for a buy. So that will wrap today's video. I'm posting this immediately right before the market opens, because on Instagram I posted one of the clips from last time, the previous video, and someone was like, yo, you're playing the market, it's not good to replay the market. I'm like, dude. So that is the reason why on the other screen I have the clock, so you can see that I'm recording this in real time, what time it is, the date, and so you guys can't have weird hating assumptions and stuff. So that will wrap today's video, because we're almost like an hour away from the market opening. So if you guys watched till this point, thank you so much. I really appreciate those who watched the whole video. And yeah, if you haven't subscribed, just make sure you subscribe, hit the like button, and yeah, until the next video, guys.